So, good morning everyone. Let me give you some highlights about our Q1 performance and what we see ahead for the rest of the year. Our revenue growth for the quarter was 2% on a reported basis and 1.5% on a constant currency basis. Volume grew by 2.9%, with on-site volumes growing 2.2% and offshore by 3.2%. Realization for the quarter was down by 0.4% on a reported basis and 0.8% on a constant currency basis. Pricing remained stable across most areas except for commoditized services and large deals, which are price-sensitive segments. On-site effort mix for the quarter was 29.2%, fairly similar to 29.4% last quarter. Our initiatives over the last few quarters to optimize our operations has resulted in our utilization excluding trainees moving up to 80.1% this quarter. This is in line with our targeted range of 80 to 82%. Utilization including trainees also went up to 74.7%. We had strong client additions this quarter. We have added 61 new clients this quarter. We added 11,500 employees gross. Net addition, however, was only 900 people, approximately 900, as attrition continues to remain high. We have taken a number of steps to reduce attrition. These include improving predictability for employees by giving timely compensation increases this year, introducing quarterly promotion cycle to promote eligible employees quickly, increasing the variable payout over the last few quarters, introducing a fast-track career path for high performers. We hope to see a reduction in attrition as the result of these initiatives in the future. Our operating margins for the quarter was 25.1% as compared to 25.5% last quarter. This is after an $8 million payout to Infosys Foundation. EPS for the quarter was rupees 50.51, lower than Q4 last year due to the impact of compensation increase, rupee appreciation, and investment in new visas. As mentioned in the last call, we have given compensation increase of 6 to 7% for our offshore employees and 1 to 2% for our on-site employees effective April 1st. Overall demand environment remains largely stable across multiple verticals. Based on what we have delivered in Q1 and our expectations for the year, we have retained the revenue guidance at 7 to 9% for FY15. Now, before I hand over to Praveen, I want to take a few minutes and talk about the last 3 years. I took over in August 2011 amongst a very challenging environment. Infosys was faced with several external and internal challenges during this period. We were coming out of an economic crisis and our customers were tentative in their decisions. The macroeconomic conditions were uncertain. We were faced with trailing business momentum. We were dealing with multiple internal challenges. We were dealing with employee retaliation cases, investigation by the US Attorney's Office and US Department of Homeland Security. We had not applied for adequate number of visas in FY12 because of these reasons, which led to shortage of on-site employees and increase in cost due to subcontracting. We also needed to relook and revamp our compliance processes. Today, these challenges are behind us. we have completed a civil settlement that concluded the investigation by the U.S. Attorney's Office and the U.S. Department of Homeland Security. A U.S. court has dismissed the lawsuit filed by the employees, and we have settled all others. We have revamped our compliance regime. Our Infosys 3.0 transformation is complete. We renewed our focus on strategic sourcing deals to regain lost ground in the bid space. This quarter, we have won 5 large outsourcing deals amounting to $700 million of TCV. We made a strategic acquisition of Lodestone to increase our presence in consulting in Europe. And finally, we doubled our revenue growth in FY14 compared with FY13. Our margins are moving in the right direction. During all this, our brand has remained intact, and we have not lost a single client due to these challenges. Going forward, I believe that I am leaving a stronger Infosys behind. I wish Vishal and his team the very best in capitalizing the opportunities that lie ahead. Before I sign off, I would like to take this opportunity to thank all of you for your continuous support, trust and affection that you have extended to us over the years. I would also like to take this opportunity to thank our clients, employees, vendors and other stakeholders who have supported us during my tenure. I have enjoyed my interactions with all of you over the years and learned immensely from them. I will now pass on to Rajiv to give his comments on the financial performance. Thank you.
Thank you, Shibu. Our first quarter revenues were at $2.133 billion as against $2.092 last quarter, which is sequential growth of 2.22%. In constant currency, the growth was at 1.5%. We have seen our volumes increase sequentially by 2.9%, which is significantly higher compared to the last 2 quarters and gives us confidence for the subsequent quarters. On-site volumes increased by 2.2% and offshore volumes increased by 3.2%. Our on-site mix declined by 0.2% during the quarter. During the quarter, we added 61 new clients with a net addition of 20 clients. Our gross margin for the quarter is flat at 37%. As you may be aware, under the new Companies Act, the company is required to provide justification if the useful life of its fixed assets is different from what is prescribed in the Companies Act. Historically, we had a different useful life for our fixed assets as compared to the prescribed useful life in the Companies Act. During the quarter, in compliance with the Companies Act, we carried out external assessment of the useful life of the assets. I had mentioned this in our recent AGM speech that we are in the process of re-evaluating the useful life of the assets. The external assessment covered building, computer equipment and furniture and fixtures, since these assets accounted for 83% of our depreciable assets as of March 31, 2014. The external valuer determined the useful life of furniture and fixtures to be 5 years, same as what was earlier used. The useful life of computer equipment was marginally changed to 3 to 5 years from 2 to 5 years earlier, and the useful life of buildings was estimated at 22 to 25 years as compared to 15 years earlier. Had the company continued with the previously assessed useful life, the charge for depreciation would have been higher by $23 million for assets held as at April 1, 2014, and hence the change in useful life had a positive impact of 110 basis points on our operating margins. You may recall that at the beginning of the quarter, we had stated that our operating margins for the quarter would drop by 200 to 250 basis points due to the impact of salary increase, visas and rupee appreciation. During the quarter, the increase of salary increase, visa and rupee appreciation was offset by 3.4% increase in utilization and the change in estimated useful life of the assets, limiting the operating margin decline to only 40 basis points. During the quarter, we also contributed $8 million to Infosys Foundation towards CSR. The average dollar-rupee rate during the quarter appreciated by 2.9%. However, the sum of its impact was offset by cross-currency movements which moved in our favor. Other income for the quarter was at $139 million, which included a forex gain of $22 million. Yield on other income was at 9.42% for the quarter. We have outstanding hedges of $1.034 billion as of June 30, 2014. Net margins for the quarter was at 22.6% as compared to 23.2 in the previous quarter. EPS is at 84 cents as compared to 85 cents in the previous quarter. Our cash and cash equivalents, including available for sale assets and certificates for deposits, were at 4.943 billion as at June 30th, 2014. This is after payment of final dividend, including dividend tax of 479 million during the quarter. Coming to the guidance, we have retained our guidance at 7 to 9% in dollar terms for FY15. This is based on what we have achieved in Q1 and what we expect for the next 3 quarters. With this, I throw the floor open for questions.
Hi, Shibu Chandra here from ET Now. This is your last quarter as CEO. Part of your speech already indicated that, but just want to understand is, you're set to meet the company. Would you have hoped for a better farewell in terms of the revenues, even in terms of the attrition? Because there's still some weakness when it comes to your top clients. I know you've said you've left a stronger emphasis for SICA, but would you have hoped for a better farewell? Any regrets as you're stepping down?
There are absolutely no regrets, and I am not a person who believes in hindsight. As I said, I strongly believe that I am leaving behind a stronger Infosys for all the reasons I said. And more importantly, if you look at it last year we crossed 50,000 crores in revenues, and we have 30,000 crores in cash in Infosys. I agree with you. I have said before, our performance in the last 2 years has not been to our own satisfaction, and we need to exceed our performance aspirations on a sustainable basis. I agree with you. So growth remains our topmost priority, and I firmly believe that will remain Vishal's also topmost priority going forward.
Thank you, Shibu. Kritika Saxena from CNBC TV 18. I had a question for Rajiv. Rajiv, given the fact that the demand is gradually getting stable, given that there is a pickup in deal pipeline, taking in mind that there are challenges in front of Infosys and there is a new management coming in, are you confident of being able to cross the 7 to 9% or revising the guidance that you're looking at? And also if you could give us a outlook and a breakup of margins, because you've taken a wage hike last quarter, 6 to 9% for offshore, 1 to 2% for onshore. Could you give us a breakup of exactly how that impacted? And you have been undertaking cost optimization drives. So how were you able to offset that in the margins? If you could break up that for us.
Sure. A lot of questions here, but let me try answering each one of them. We have done reasonably well in the first quarter. We have grown at 2% for the quarter. Our volumes increase is very, very encouraging. We have volumes are at 2.9%. On-site volumes have gone up almost after 2 to 3 quarters, which is a very encouraging sign, which means that a lot many more projects are starting at on-site. And typically the project starts on-site and the ramp-up happens offshore. So I think they are very encouraging signs. Based on our estimates, based on our discussion with the clients, our segment heads, and the business momentum that we're seeing, the deal pipeline that we are seeing, we believe that 7 to 9% is the right guidance at this point of time. And we are very excited about the future. Yes, the management changes are happening, the transitions are underway, and Vishal brings with him a lot of hope and a dream for the future. And I'm sure that we would be able to meet 7 to 9% guidance. Coming on the margin front, what we said at the beginning of the quarter is that because of wage hike and the visa and the rupee appreciation, the margins could decline by 200 to 250 basis points. But as I said, the depreciation change has had a positive impact of 110 basis points on the operating margin. Our utilizations have increased by almost 3.4% during the quarter, which has really helped us in improving our operating margin than what we had estimated at the beginning of the quarter. And a lot of impact of the rupee movement during the quarter has been offset by cross-currency movements which were in our favor. So I think we have done reasonably well on the margin front. All the initiatives that were taken over the last 5 quarters on the cost optimization has helped us put in place a very robust cost structure. I think it's very important to understand that we have to invest for the future. We have to make investments to accelerate our growth, and that will only give us a sustainable operating margins. So I think as we speak, I still expect margins to be a little volatile in the near term, depending on our need to make investments. and we would continue to make investments to accelerate our growth. Thank you.
Hi, this is Rukmini from Bloomberg TV. My question is to Praveen. Praveen, you guys have been talking about growth all this while. Going forward, is there going to be any, renewed focus on any vertical in particular? And also, what is the, game plan going ahead? How do you see growth coming from and from where?
I think from a strategy perspective, as Shibu said, Infosys 3.0 strategy is in place. So we are focusing a lot more on execution. And if you look at this quarter, growth has been all round. We have seen growth across verticals. And when I look at the pipeline, again, we are seeing good growth in financial services. We are seeing good growth in manufacturing and retail and CPG. Two verticals where we are, at least for the coming future, we have some challenges are around life sciences and in the communication segment. So there we are seeing some challenges. But otherwise, if you look at it geographically as well, while Europe has declined this quarter, it's not a secular trend. From a pipeline perspective, we see strong growth both in Americas as well as in Europe. So from that perspective, I think we are seeing all around. So it's not about any specific sector. But from our own perspective, our presence in a couple of segments like insurance and healthcare and life sciences are limited when compared with competition. So in order to focus on that, in the recent past, we have carved out separate segments focusing on that. So going forward in the next few quarters, we should start seeing some positive uptick in those segments as well. So net-net, I think we are seeing growth opportunities everywhere. We are just focusing on the execution piece because our strategy is in place and we think that is the right strategy for the future.
Hi, this is Vinita Atre from CNBC TV 18 and CNBC Awaaz. So I'm going to go ahead and ask the question in English. Try and answer it in Hindi, please.
Rajiv will be the only one.
So, North America has bounced back after 2 quarters. Do you see that growth kind of sustainable, especially coming after a degrowth? And also domestic markets has, it's been about 6% Now the new government has come in and there's a lot of change and momentum on the political front as well. Do you see that picking up as well, and how soon?
So as far as North America is concerned, I think the demand environment is stable and our pipeline is also pretty stable. So we expect, but for us, we need to see all around growth. We need to see growth in US, in Europe and rest of the world. So our focus will continue to be to create growth in all the markets. As far as India is concerned, we have entered India with certain strategic priorities only a few years back. We have certain challenges in working with public sector bodies in India, our government. So we are refocusing our India business and we will continue to be. India is strategic to us, we will continue to be here. But it will grow, I would say, fairly slower pace.
Thank you.
Hi. Rajiv, apart from cost optimization, I noticed that there's also been a change in the depreciation policy which has helped your margins. Why this change, and is it really sustainable? And also the attrition number is really alarming because I think on a quarterly basis it's almost at 26% according to one estimate. So what are you all going to do to rein in attrition at this?
I did cover the need, why we changed the estimated useful life of our assets in my opening remark. The fact is the Companies Act prescribes a certain useful life for all asset class. And if any company is using estimated life which is different from what is being prescribed by the Companies Act, you have to justify it. So we historically have used useful life which is different from what is prescribed in the Companies Act. So we decided to go for an external evaluation to assess the useful life of our assets so that we could go back to the MCA and say this is what our useful life is and this is based on the external evaluation that we have carried out. As a part of that process, the useful life of furniture and fixture was still at five years. So external evaluator assessed the value, the estimated life to be at 5 years. However, for computer and equipment, especially for servers, the useful life was assessed at 5 years as against 2 to 3 years that we were using earlier. And so for buildings which were being used, where the useful life was earlier at 15 years, it was assessed at 22 to 25 years. Hence the need for change. And it's not about, it's the question on whether it can be sustained. I think this is the useful life of the assets as evaluated by the external assessor, and we are using that, and this is what we're going to use for going forward. So I don't think there's a question of sustainability here. On the attrition front, I'll ask Stan to answer this.
All right. So yes, the attrition has gone up to 19.5% in Q1, but if you look at our data for the last 3 years, you will find that the attrition in Q1 always goes up, and a primary contributor to that is the number of people that leave us for higher education. So that's one aspect. Now, on the question of what are we doing on attrition, Shibu articulated a few things, and all of those are based on what our people said. So one is predictability. So we brought in a calendar of events. They saw the compensation hike on time by March 31st. We said we will do quarterly promotions. We have done that already twice, once in Q4 and in Q1. The recognition of high performers, so differentiation for high performance has come about both in the compensation hike and in the number of people that got promoted. Then the engagement aspect, so we revisited some of our flagship programs like Petit Infosys, for example, where employees get to bring their families to Infosys campus for a day, and that makes a huge difference to the individuals and the families and our connect with the families. So it goes beyond the employee into the extended family. So a lot of those are in play. We expect those to start yielding results over a few quarters, because there's always a lag effect, either on negative or on positive interventions. And we will see those, I think, coming about over the next few quarters.
Hi, Kritika Saxena again from CNBC TV 18. Shibu, I wanted to ask you, of course, products has been an important focus area for Infosys. Going ahead now, and if Praveen could also answer that, is there going to be a shift from services to products in terms of your outlook, in terms of the way you are operating with your clients, or is it going to be a balanced focus, as in there will be the same kind of focus on services and there will be a thrust on products? Will there be an edge towards products?
No, actually, I think there will be much more focus on services. I think we confuse this all the time, and that's why I want to be very, very clear. Because today, if you look at our revenue, 94% of our revenue comes from service side, and that is where the growth is going to happen predominantly. So we have to be completely focused on services. At the same time, one needs to remember that the boundary between products and services are now becoming more and more diluted. It's not as clear. What is called product can be given to the client as a platform, and that's what we are looking at. When we look at the future, see, strategies are meant for 5 to 7 years. It is not meant for 2 quarters and 3 quarters. The strategies yield results over a long period of time. If you look at the world in the future and see 5 to 7 to 10 years later, how the clients are going to behave, we clearly believe that the platforms and the products will have a prominent play in our client's life, which means that we have to invest in those areas now, so that eventually, we are a strategic partner to our clients, and we do provide those services to our clients, and that's what we are doing. So we will continue to focus on services. We will continue to invest in our products and platform. This quarter, we have created the subsidiary which will give it autonomy to do it differently than Infosys, and I clearly believe that the strategy will play out over a period of time.
Hi.
Okay, if I may add, if you look at how enterprise IT is evolving, historically, clients used to own all the assets. By assets, I'm talking about data, network, devices, applications, and so on. But today, when we look at what's happening in the enterprise, we are seeing emergence of hybrid cloud environments, where clients are leveraging cloud, both private and public cloud. If you look at applications again, the way applications are consumed are changing, because now we have the emergence of Salesforce.com and things of that kind, where applications are being consumed rather than being owned by the client. And similarly, when you look at it from a devices perspective, today you have the bring your own device kind of concept. So in future, enterprises will probably own only data, and probably they may be custodian of security. But otherwise, their role will be more of integrating all this, and this is where we find that we have a role to play. We can be the we can be the integrator of all these varying assets. We can help clients take over their platforms. We can help industrialize the platforms. We can help them migrate it to newer technologies, and so on. And we are seeing many more examples. So that is the shift that's happening, where applications are being integrated with infrastructure and hosted on a cloud. and on top of it, you are able to offer BPO for processing, and service providers like us will be able to offer end-to-end and without client owning any of those things. So that is the shift we are seeing, which is different from the product that you talked about. So we are having a play there in that space.
My question to the CEO, Shibu, last few days at Infosys for you, right from the day of the announcement and till now, what has been your engagement with Vishal? We'll all be very interested to know the kind of talk you've had with him, and also any piece of advice that you've passed on to Vishal.
So I have known Vishal actually over last few years, because Vishal was the sponsor for Infosys from SAP, and I was the sponsor from SAP from Infosys. So we have met few times over the last few years. I have known him, and this is not a unknown. He's not an unknown person to me. The transition is in progress, and it's a pretty planned, systematic transition, and it will continue until July 31st. Lot of conversations, but all private.
Thank you very much.
Thank you.